AIM-listed Bradda Head Lithium came to the London market just over a year ago, and in the words of the management, it's been a great first year. But it's a pre-revenue investment proposition, and for those wanting to see an immediate return, it may be a jump too far. That being said, it's cashed up, and the projects it's working on are in the safe jurisdiction of the United States. We spoke to the Chief Executive, Charles FitzRoy, back in January this year, so with recent developments, it seemed a good time to speak again about the company. Charlie's with us now here in the studio. Welcome. It's good to be able to catch up with you face to face. It's always better to speak to people so you can see the whites of their eyes, if you like, because there is a lot that's gone on here. And I'd like very much to analyse a little bit more detail about this last year, because it's been, in your words, a good year. Why do you think that's the case? And where does it take the company to where we are at the moment?
Yeah, well, thank you for having us on the show. And it has been a good year because we listed last year in July. We had a good listing. We raised over £6 million. We also raised some more funds in December and signed a royalty agreement. And then we've raised some funds in April this year before a lot of the share prices dropped off. So from a funding point of view, we're in a very strong position as a company. We've also accomplished 3 drill programs in that year. And we've just started a new one recently in our pegmatites in Arizona, where we have one of our main asset types, pegmatites, clays in Arizona as well, and then brines up in Nevada. So we've had a really busy year as a company. And we're also in the process of listing on the TSXV. So we've done a lot in our first year of listing, and there's a lot of things to come from the company. A lot of news flow the second half year and into next year because of the funds we've raised. Yeah,
I was going to ask a little bit more about that listing in Canada in just a moment on the Venture Exchange. But let me just, forgive the pun, drill down a little bit, because I'm not a geologist. I want to know a little bit more about what it is that's been presented here in terms of the geology, because my understanding is you mentioned pegmatites, which I believe is hard rock.
Correct.
You've got clays and you've got brine. Now this, on the surface of it, will give us a nice broad spread across a number of different risks within the lithium space. Explain more about what it is that's going on here and what you're going to be leading on with first.
Well, this makes us unique as a company. We have the 3 asset types, as you mentioned. Most hard rock mining currently, or pegmatites, is conducted from Australia. Which is then mined in Australia, made into a concentrate, sent to China for processing, where it's shipped on to around the world. And the majority of brines right now are in South America, which a similar thing happens with their end product. Clays, all the developing clay fields are in North America, in Nevada and Arizona. So we have 3 asset types, all in Arizona and Nevada, which are fantastic jurisdictions to be developing projects. And that makes us unique. And we are pushing ahead all of them at the same time. We've been focusing on the clays last year because we were permitted to drill there at our IPO. So we did our first drill program there. We did our second program there shortly afterwards. And our third one was up at Nevada and the shallow clay program. And with our start of our pegmatite project now, which is drilling at the hard rocks, like the Australian projects I mentioned, that marks moving into sort of secondary phase of our development, because we've been mainly focused on the clays until now, preparing the drill program, doing the background work, the geophysics, soil sampling, mapping. We just released some results from SRK on their 3D mapping, which showed that the pegmatites, potential pegmatites at surface, was about 190% more than we thought previously. Which is a massive upside potential for us, and shows a huge exploration target. Obviously, we need to ground truth these pegmatites to make sure they are there, because this is from surface mapping data. And the drill program we have now is starting to drill at our pegmatite prospects. We've got 23 kilometres there. And this first program is just going to sort of understand more about the structures. Because the reason why we're doing this is because we think the pegmatites or the hard rocks are similar to some assets in Australia. One comparable asset potentially would be Liontown's Kathleen Valley, which has small pegmatites at surface, which go down to deeper feeder systems at depth. And we're trying to drill underneath our pegmatites to understand where the roots go and what's below it. And that's what we're trying to get from this first drill program, which will make us understand more if there is a viable operation there. And if there is, that's fantastic for us, because getting a pegmatite operation into production will be quicker and cheaper than brine or clays because of the lower capital cost, because we are producing a concentrate rather than end products. I know, I'm sorry, I'm getting...
No. You've now defined the 3 areas quite neatly. You just said why you're heading in all these 3 different directions at the same time. But are you going to end up with a different end product which does different things for different companies? Or do ultimately, I mean, is it just all lithium?
That's a very good question. So with pegmatites, they are generally made into a 6% spodumene concentrate, which is processed to lithium hydroxide first generally. Lithium hydroxide is used in different types of battery types to lithium carbonate, which you would generally get from processing brines. Carbonate is used in sort of higher cobalt batteries, and hydroxide is used in higher nickel batteries. That's a big generalization, but that's largely loosely around it. And then the clays, it is uncertain which end product they're like to go towards. We're going to be looking at either of them. I think we're probably trying to go towards hydroxide because that seems to be what the end users are wanting. But we were looking at both during our process testing. We're moving into the second phase of our test work there. The first phase of our test work from our clay projects was very positive. We managed to get 99% extraction of lithium within 1 hour into leach, which is fantastic. And now we're moving on to the second phase of a larger sample to see the more likely the commercial viability of it.
So let's take a look at what we've got in terms of movement from here. I think you've got, $15 million on the balance sheet as at the last count we saw with the earnings just released. What's this going to enable you to do, and what's the runway for that?
So that 15 million will enable us to get our clay assets to an early stage technical study, which is what we're moving towards. We increased our resources at our clay assets earlier this year, and we're in the process of getting the permits through for our Basin East extension asset, which will enable us to start our next drill program. We should be starting that hopefully in September. And then after that, we'll move into drilling Basin West and West extension. And all that will push towards a larger resource. At the same time, we're doing metallurgical test work. And all this is going to feed into an economic study towards the end of next year, which will help us put some numbers for capital costs, operational costs, and potential NPV of the project. At the Basin project, where we have a 6 million tonne exploration target currently and a 305,000 tonne lithium carbonate equivalent resource. It'll also help us to finish our program at San Domingo, which is our first program there to demonstrate what's going on at San Domingo, which is our pegmatite prospect, and it will help us to test our Wilson and Eureka brine prospects up in Nevada. And then we also have another 5.5 million to come from our royalties we signed with Lithium Royalty Corporation. So those two payments, one's 2.5 million, one's 3 million, will come as we expand our resources at our clay assets at Basin.
Let's bring in the share price, because I wanted to reference this if I can, so we can bring up the share price just to take a look at where we are with the company. You listed on the London Exchange July last year, 2021, 5.5p. This goes back pretty much to that IPO moment. Since then, we've seen this rise to almost around 17 pence a share, not too far away from the time which we last spoke to you. Since then, there has been this pull. What's represented now at the share price at 8.7 pence, which is where we are, bearing in mind you've got 15 million as well cash. So what's built into the share price?
Well, we had our share price drop like a lot of people did early in the summer. Luckily, we did our fundraise before that happened. And right now, we've had a bit of an appreciation in our share price since our lows of just over 6p recently. It's interesting you ask about what's baked into this, because we've got a broker who covers us in North America. Their share price target's 45p. And that's based on our Basin project valuation alone. So right now...
45p?
Correct, 45p. That's their target price for our stock, purely off the Basin project, not including Wickiup, San Domingo, Eureka or Wilson. So they're basing that valuation purely off the Basin project, which is one of our clay assets. So right now, I would say, from that point of view alone, we are very cheap. And as you said, we've got 15 million in the bank, another 5.5 million to come once we expand our resources. So I think there's a lot of upside for us as a company.
How does all this play into this idea that the West is desperate to find its own resources? Because China dominates this area, doesn't it? We spoke about this in January, and this is another reason why I wanted to speak to you face to face, because I really wanted to get a feel for just how important it is for, well, in America, so far as you're concerned, because obviously your assets are based over there. And we've just been listening to the Biden administration coming through with this new initiative to try and get more resource for battery metals generally, lithium included, from America. First of all, politically, is what you're hearing what you'd like to hear, or do you think they could either go further or do something differently? Are you happy with what the politicians are doing in terms of this drive?
I think it's a fantastic step. The announcement that by 2026, 80% of the content of batteries, the critical minerals, must come from inside the US is fantastic. For us as well, we're trying to develop our projects in the US for the US market, so it's ideal for us. And also from a low carbon point of view, a lot of lithium is mined in Australia, South America, goes to China, and gets moved on. Our lithium is not going to be transported anywhere near that. It's not going to pick up that carbon footprint. So from both carbon footprint point of view and from a development of the US battery supply chain, we're ideally positioned, and I think it's a fantastic step forward.
How much of what we've been hearing has been generated this idea that you've got to be listed in Toronto? Is the venture exchange listing anything to do with this idea that you want to anchor your presence more in North America?
Well, I think our projects are in Arizona and Nevada, and we did a recent fundraise earlier this year. A large portion of that fundraise came from North American funds. There's clearly an interest there. There's quite a few lithium projects in North America which have done very well. We've got our peers on the UK market are looking further afield to ASX. Another Atlantic lithium companies, they're going to list an ASX. I think a lot of lithium companies in the UK are looking for areas where there might be a very large investor basis, especially interested in battery metals, maybe with a higher risk appreciation. And that's for us is a very interesting place as a company. It's a North American asset base, and we want to give the opportunity to North American shareholders to invest in Bradda.
How important is it, do you think, to stay independent? I mean, obviously you can't do anything about people buying up your shares on the free market, and of course that goes for Chinese investors as well. Do you see yourself as remaining independent? You've clearly got in your own mind a good base of assets which will, in theory, give you value down the road. Is shareholder returns in the long term going to be as an independent company, or do you see it being merged into a larger organisation?
I think what we're trying to do as a company is, as you said, return maximum value to shareholders, and that's all our shareholders. There's going to be a natural consolidation in the lithium market because of the small players right now. If we come across opportunities which make sense from a shareholder point of view and a long-term strategy growth point of view, then we will look at them, of course. But us right now, we've got a lot on our plates, enough to go on with, and we're very busy. So right now, we've got more than enough to go on with, and we've got the funds to do it, which is the key thing.
Well, that's the thing, of course, isn't it? What's down the pipe for this year? What's in your intro at the moment? Most important to get on track for shareholders to understand that you're on target?
Well, it's the San Domingo drilling project, our pegmatite project, which is the hard rock asset in Arizona. We started drilling there very recently. In Arizona in the summer, you have monsoon season over August and July, so we've had a 1 or 2 week delay on that project, but we are drilling there now. As soon as we get results through, we're going to be getting this to the market because that's very positive. That is what a lot of investors I think are very keen to know about, because our clay asset, to some extent, we know the clay is there. We just need to drill it up. We also need the process work at the same time. But the pegmatites, it was an old historic mining district back in the 40s and 50s for lithium, and it's been mined at surface, high grade at surface. But our thesis that we have these deep feeder systems at depth, that's the key thing which we want to demonstrate, and that's what we want to get across from this drill program. So that's the key thing for me. Secondary is basin, getting that drill permit through for Basin East extension. Once we do that, we can get drilling there, which will help us expand our resources there, which is important for us for a operational point of view, and also from a cash, because we get those secondary and third royalty payments coming in as well. So that's vital. And then the TSX listing goes alongside of all of that, because that is, again, a key thing for us, getting investors from North America and getting more liquidity in the shares. Yeah.
Well, Charlie, it's a pleasure. Thanks indeed for dropping by. I know you're a busy man, but thanks for your time. That's Charles FitzRoy. He's the Chief Executive of Bradda Head Lithium. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.